CNBC TV18 and India Bonds presents Bond Street.
Welcome to Bond Street. Joining us on the show today is Vijay Chandok. He's MD and CEO at NSDL. Mr. Chandok, hi. Thank you so much for joining in.
Thank you.
And the way the markets seem to be performing right now, what would you say is the driving factor for increasing retail participation into the debt market? In the last couple of years, the numbers have been quite strong. And there is a certain push now, starting right from Niti Aayog report to budget mentioning debt market. And then, of course, SEBI has also done an outreach program. Would you say the time is right or ripe?
Thank you. Thank you very much for having me on this show. Indeed, I think I've been in this industry for a long, long time. And we've been talking about the importance and the depth that is required in the bond market. I think finally, thanks to all the efforts that you just mentioned coming all together, I think over the period of last few years, that bond markets are indeed increasing. But to my mind, I think that the real compelling regulation that our regulator SEBI brought out, I think, which has really propelled the bond market forward, is the OBPP regulations.
Sure.
Having come out with those OBPP regulations, we are seeing a proliferation of OBPP platform providers. So we have more than 40 of them in the country now, and we have partnered with many of them at NSDL. We provided them digital experiences so that the entire process of onboarding is made available in a much more simplified and a convenient way. In addition to that, one of the other challenges that we've addressed, which is important for the retail investor, is information. So through our portal, NSDL India Bond Info, we provide a plethora of information about bonds, which really helps a retail investor to understand the risks and then take an informed decision. We also power the trade repository. The depositories power that. And through that trade repository, there is a plethora of, again, information pertaining to the yield, pricing, the quantum sold, so that this kind of information is also available, which is important for decision making. In addition to that, we have also introduced things like demat account validation, an online real-time service, which enables that the platform which is providing the sale or purchase of the bond is able to immediately access on a real-time basis the investor's demat account, confirm it, and so that the transactions could be put through. So I think a lot of facilitation, paperlessness, digitalization, information flow, I think all that has happened in the recent time. That's really propelling the retail participation to bigger heights. So a lot of effort has gone.
Oh, yeah, I can see that. You've been counting that. OBPs, 40 of them right now. With the kind of market that there is right now and the way it's opening and the kind of push that it has, do you see this number going higher?
Indeed. In fact, a few months back, it was 40. It's actually crossed 42 now. So, yeah, I mean, we've seen growth. We have seen not just growth of OBPPs, but I think their numbers are also now starting to increase. The amount of demat accounts, etc., that they open on a monthly run rate basis, I think that is also showing a healthier trend. What is NSDL doing really in this regard when it comes to enhancing liquidity, or the fact that the way we have distribution models for mutual funds and insurances, which is quite easier, do you see that being replicated when it comes to bonds? Yeah, I think what really has helped the mutual fund industry increase their distribution network are fundamentally 3 or 4 aspects. I think one is the digital experience, which has made things easy, paperless, and simple to operate. The second is the advisory network, which has come and brought the understanding of this to the retail investor. So these factors have really, and the smaller ticket size, I think combination of these factors has really helped the mutual fund industry. We are beginning to see some components of this coming into the bond market as well. Recently, SEBI has brought down the minimum investment from 1 lakh rupees to 10,000 rupees. I think that's a very positive step. There has also been growth of or involvement, I would say, of the advisors into this particular category of investment. So in addition to different other instruments, they're also talking about bonds as an important source of diversification. And the entire regulatory environment, interest rate environment is also conducive. So these factors, the information availability is also growing. So these factors which has helped mutual fund industry, we are seeing similar factors taking seed here.
So I suppose that's already starting to show some benefits. And as this network and ecosystem matures a little more, I think more growth should be expected going forward.
Mr. Chandok, when you look at the kind of money that India raises from its debt market vis-a-vis bank is still very small in percentage. It is also very small in percentage when you compare it to other various developed countries or developing countries. What is it that you think India would need to do to push those 2 to 3 points to ensure that these markets start coming to the debt market in some more bigger way?
Yeah. So, you need the whole ecosystem to respond to an issuer. That's what helps the market grow. I just mentioned some of the components which have been laid out. So let me try and explain this with some numbers. 2 years back, we saw the total issuances of about 9 lakh crore. This has now gone up to next year it went to 10. This year it's likely to be 11. So we are gradually seeing that as the ecosystem which supports bond markets is coming together, 9, 10, 11, that lakh crore. So that's the kind of growth we are seeing. I think more information will certainly help, because the terminologies associated with bonds is not so straightforward, for a retail investor. So that has to be demystified, explained to him. He needs to understand risks. He needs to understand the kind of impact interest rate movements can have on it, and so on and so forth. So these are not so straightforward concepts for him to grasp. So explanation is important. So as that maturity comes, understanding comes, information flow happens, I'm quite hopeful that that's going to also lead to some growth in the markets.
CNBC TV18 and India Bonds presents Bond Street.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.